Good day, everyone. We've got the continuation of this QE-motivated uptrend. The S&P and the NASDAQ and the Dow, they all broke out of their tight waist consolidation last couple of days. The leading stocks are, some of them are continuing higher, some of them are healing up after their fairly steep drops when the market had a, as we were saying, a 1 to 2% correction. These leading stocks often get hit hard for several percent off their peaks, and so then they need a little bit of time to heal. But nevertheless, we have a very QE motivated environment on our hands, and we are looking at a few. Well, it was about 3 weeks ago that gold was retesting some critical lows. It's now bouncing. I wouldn't be surprised to see this bounce be a dead cat one, and the retest of those critical lows around 78 and change. It's hit that 78 and change level 3 times in the last couple of years, and then we also have the more even critical level of 71.05, which would mark an all-time low for the dollar. And so it's a question of how much money printing is going to take to get the dollar down to those levels. Gold and silver have been potentially putting in floors over the last few months. Gold and silver have both bounced, and now they're retracing that bounce. There's a lot of cross currents with these commodities, so they're going to get knocked around for various reasons. But ultimately, with all the QE printing going on, and with the Fed looking for certain markers that are a fair ways off, QE is probably here to stay for a lot longer than people think. And I would expect, therefore, commodities and precious metals of that sort to trace out their lows and probably start some sort of sloppy uptrend. The Commodities Research Bureau has been in a downtrend since 2011, and there's no sign yet that this downtrend is going to end. But on the other hand, the rate of descent does seem to be slowing. So I wouldn't be surprised to see the CRB index trace out a low as well and start to head higher. Gil?
This is Dr. K. If you were going to see metals head higher, do you think that's positive also for the market, and we're going to see the market just continue higher into the end of the year?
Yeah, I think that with all the QE firing on all cylinders across 4 major central banks, we're probably going to, actually 5, Bank of Australia as well.
Right.
We're probably going to see, it's good for hard assets, and that means stocks and commodities, precious metals, real estate. Those sorts of vehicles should stand to profit from all that money printing.
Okay, I would say with the indexes breaking out, that's definitely where you're headed right now, and there have been a number of stocks acting pretty well. I mean, this week, the star of the week obviously was, you can guess this one, GoGo, and it's run up very sharply. You had the Bible gap up. We put the alert out before the opening. We talked about it in the pre-market pulse, and then put the alert out once it opened up, and it looked like it was ready to go, and that thing really launched. I mean, I sold mine in the run and a little bit early, but as Bernard Baruch said, I became wealthy by selling too early. So, that thing was up 20, 30, 35%. I think it was almost a double. No, it was about a 60% move, right, Dr. K? Something like that.
Yeah, it's
Can you give me the exact number?
From the pocket pivot close at 18.75, it went up about 80%.
Yeah, so I mean that's a huge move, and well, I don't think anybody bought it. I actually bought some on Friday when it looked like it was going to get back above the 10-day. By the end of the day, though, it did hold up. It's a pretty volatile little stock. Wasn't sure going into earnings. One of the few stocks I played earnings roulette with, but not with the whenever something goes up that much, it's pretty much axiomatic that you do not own enough of it. Okay, if it goes up, when you have a move like that, I don't care how much you own, even if you're 400% long the thing or 200% long the thing, it's still not enough. So anyways, but it's always nice to be piggy with a stock like that, and just 1 week's time, and we've seen a number of stocks running in 1 week's time. Solar City, I think this is setting up again. I thought it was viable along the top of the basin here as it comes in, and then you get a nice rally. Yesterday it was up I sold stock yesterday thinking that it's probably going to settle into the 10-day and go sideways. I'd be watching for that. And I think that's something to keep an eye out for. I think the stock can go higher. I mean, the solars are still continuing to act really well. Canadian Solar, I think TSL came out with earnings or comes out with earnings. Did they come out with earnings, Dr. K? Can you check on that real quick for me?
Yeah, let me check.
I know it was, no, it's the 18th, right? So that would be
18th.
Monday. Is that correct?
Yep, Monday.
Yeah, so they'll be coming out on Monday. Anybody want to play earnings roulette on this one? I mean, you know, you could buy 1,000 shares, and the most that you'll lose is 16 bucks. You know, and I've done that plenty of times on stocks. So, you know, maybe that's worth a shot. SunPower looks okay here. You had a Bible gap up, but remember, you're coming straight up into some left-hand overhead supply, and a pullback here. It looks normal. I think I'd be using it as an opportunity maybe to buy shares down to 32. I think you can even fill the gap because this to me isn't really a big Mondo Bible gap up type thing. You know, not like the Go-Go was, for example. I mean, just contrast the two. Here's your Bible gap up yesterday in the Go-Go thing, and I'm sorry, in SunPower, and then whoops, come on, baby. Here we go. Yeah. Look at that. You can see that that's more of a powerful Bible gap up that's ready to rock. So I'm going to put this out right now because I'm seeing the stock start to come off its lows again. Anybody who's been on the chat room knows about my ugly duckling theory, and I'm going to do something here that's going to like freak everybody out. Let's put a I want to put a new moving average in here. Whoops. What am I doing? Let me put in a 150-day exponential moving average here. I'm going to color it orange. Is that a nice orange color? Yeah, there we go. And I don't know, that maybe not. Maybe we want something a little less. Yeah, there we go. Let's try that. And there you have this 150-day moving average. In my studies of the short side, you know, I've learned, and we talked about this before, the 65-day. Okay, let's put a 65-day up too for those of you who want to get into what I call MAS, which is moving average stress syndrome. Here we go. Okay, put that in. All right. Tesla coming down. You know, you had. I see this as one wave down, second wave down, a third wave down in the pattern, and it looks pretty ugly. But on the weekly chart, you're getting a little bit of a narrow range here, kind of a doji type thing. If you look at weekly candles, which I do. But, you know, I'm trying to put a lot of different pieces together, so it's not gospel. I'm sure that's going to bring a lot of questions, but, you know, try and follow along here so you understand what I'm saying. But I've noticed that these moving averages, 65-day, you might notice here on the break, the violation of the 50-day, Tesla bounces off the 65-day exponential. Now you're coming down on this third selling wave, which is really the steepest, and it has a little bit of a climactic look to it, you know. And in other words, everybody just screaming, "Get me out of this thing! I hate this stock now." After everybody first hated it, then loved it, and now they hate it again. So, I think this thing is bottoming, and you're getting a little bit of a white coffee and low. Dr. K, what's the volume on Tesla running today? It's like 5% above average. So
6%. So we're pretty slow here.
So I'll bet you this thing continues to dry up today. But you basically have this break. You find support at the 150-day exponential moving average. And then you pull back on a white coffee and retest. I think you're in a position to do something like what LinkedIn did. Because if you look at LinkedIn here, we got one selling wave here, two selling waves here, and then finally a third one where it's basically, you know, everybody says, "Get me the hell out of this stock." And so it hits the 150-day exponential moving average. Notice how the volume dries up on the lows and the thing turns and runs. You can kind of see this coming, and it's still going, and I wouldn't be surprised if you got all the way up to the 50-day moving average, and it turns out to be some big, bizarre double bottom formation. Okay, so I know this was a short sale target for me earlier up here on the earnings day, but it's played out for now, and it'll be interesting to see, you know, is this a head and shoulders? Well, if this is your right shoulder here, you can see this. If this is your right shoulder, it's above the left shoulder. So my bet is that this could turn into a big double bottom in a continued market rally, and this stock could take off. So if you're going to assume that you can short it willy-nilly and everything is going to be, you know, you're going to make money, you're probably, number one, a little bit late to the party, and number two, not really looking at the pattern with an open mind and looking to take advantage of the movement one way or another. So, in fact, just give me 1 second here. I got a trade to put in. You got anything to say about any of this, Dr. K? Other than, I don't think I've talked to you about this before, but
What talked about what?
150-day exponential moving average on short sale targets. But anyways.
Yeah, no, that's. I mean, it makes intuitive sense, just because there, at some point, what happens is these things are going to run out of. They're going to run out of selling pressure, just because the three waves down, right down to that moving average makes good sense. That it's a very low risk entry point to actually be buying the thing.
Right, and we do own a little bit of the Tesla today off of this. I don't know if it goes today. Maybe it takes another day or two, but I'm guessing the thing's going to turn. So why don't you guys push that up for us now that we've told you? Number one stock today, from people asking us, wanting to know our thoughts. I really have to say, I kind of get the hair on my back, the back of my neck raises up, and I know I have a hang up. I need to see a therapist, but when I hear questions like that, what are your thoughts? It's like, I feel like we're failing basically because people aren't learning to think for themselves, to take some information. We put out the Pocket Pivot and the Bible Gap Up reports, and that information is there for people to use, and we're helping you by tracking it for you during the day, and it saves you some of the trouble of having to do it yourself, especially if you have a day job or something else that you have to do during the day. So, people say, what are your thoughts? Well, I would have told you this thing was climactic 2 days ago or yesterday, but the bottom line is here, you're not late in the stock's run. And in fact, if you look at it, here's this giant cup with handle, and you're breaking out of it, okay? So for all you know, if this thing has a sharp yank back, that might just be a chance to lay into this thing and buy shares. So, it's really, if you look at it in terms of the longer term pattern, this is really a big first stage base, and it's a huge base. And so it's nowhere near a climax top. It might be short-term climactic, and the stock will come in and then pull back in and form a base. A 10-day line, which is this purplish line here, may need some time to catch up, and it's going to set up along there, form a flag, and then go again. Okay, so that's a possibility, and that's probably what you're looking at now. If you bought it down around 6 or 7 and you own it, why do you need to think so much? That's what I would say. And why do you need us to help you think by offering our thoughts, which are absolutely useless in any context as far as I'm concerned? You got to stick to your strategy, know what your strategy is, what is your objective for the trade, and look at what the pattern is doing. Okay, just because it's up a lot for several days, yeah, it might pull back, but how do you know it doesn't just sit here and hold tight? So, for myself, I would probably have sold into this run with the idea of buying back on a pullback because I'll be heavy, really, really heavy coming out of here. So, anyways, that's today's number one question. Let's see what we got up here. Somebody's asking, is your short selling seminar on your website? If not, how do I get a recording? The one we did yesterday was for the E-Money show out of London, and I have to tell you, Dr. K, that really threw me off because they said 3 p.m., and I'm thinking, okay, 3 p.m. after the market hours, and, not a problem. They didn't tell me it was London time. In any case, we did that for the E-Money show. Where is there a link somewhere, Dr. K, that they can get the...
I have no idea. That's
I don't either.
I would write the E-Money show because they may have something that you can link to.
Right, and so check with them. Just search E-Money show London, I guess, and see where things go from there. Anyways, what else? Oh, okay. X1. I kind of like the X1 pattern here. It looks okay. Might back and fill a little bit in here. Volume's drying up today, I believe. Let me check that. Yeah, it's drying up a little bit in here because you've had a nice run. You had this pocket pivot here. Did we put a report out on that one, Dr. K? We did, didn't we?
I believe we commented on it.
Yeah. Stocks moved up higher. You had earnings come out yesterday. Didn't really go anywhere. The good news is it didn't sell off. And with the other 3D stocks acting pretty well, you're probably going to see this one move higher, I'm going to guess, unless it just blows apart here. But you're not seeing any heavy selling. You know, I think as it comes in here, it might be viable to buy a little bit and see where it goes from there. But I think it looks, you know, looks okay. Let's look at the weekly chart. It's a big, sort of a V-shaped, probably going to be a V-shaped cup with handle. So that's what I'd be looking for this to form. I don't know if it forms the handle up here at 65 or down here, but so far, you know, it is seeing some stalling, but you would expect that from the overhead. So, you know, it could head back to the highs and form a sort of a pod that takes you up to the 75-80 area. That's a possibility. No follow-through on Spewer, somebody asks. Well, as I was talking about earlier, you've got overhead on the left side, so it's not a huge go-go type of Bible gap up. It's more of a, you know, a nice slow SunPower type Bible gap. So it's pulling in. I think the stock's okay as it's coming in, and you can probably you know, step in and buy some shares on the pullback. So that's my thinking. UUP. Do you think the dollar is in a long-term downtrend or making a bottom? Did you already talk about that, Dr. K?
Yeah, I mean, with all the money printing going on, it's, you know, it is a race to zero between the pound, the dollar, and the euro. Said sort of tongue-in-cheek, but ultimately these fiat currencies have a limited lifespan, and I think, you know, we're at the beginning of the end for the dollar in terms of being the world's leading fiat currency. So yeah, the answer is that the dollar continues to retest some critical lows, and if according to UUP, if it breaks below 20.84, that coincides with the all-time low for the dollar being, well, actually no, the all-time low is 71.05, and that was established in March of 2008. And again, though, it's tested that. It's come very close to that level in mid-2011. And so I wouldn't be surprised to see this downtrend right now in the dollar is pretty soft. But if it continues to be soft, we're going to see it retest those critical lows probably within a year or two from now.
Yeah, I'm trying to pull these low. There's it's actually on the UUP. It's below the 2008 lows. Interestingly enough, Dr. K, what do you think of that?
Yeah, I would just use the you know, I would use the value of the dollar as more of the main guide.
Okay, so if you're looking at what is the? I don't think I have that on this chart.
But once we get down to the 72 level, I mean, we are really getting into dangerous territory.
Yeah, there it is. Yeah, you're right. Here it is. Here's the U.S. dollar index. There's a low there. So.
And the dollar, a lot of people don't realize that the dollar lost nearly 40% of its value against major world currencies from, I believe that was 2002 to 2007. So, you know, it's called middle class getting slowly wiped out from their diminishing buying power.
Anyways, okay, let's get to some more questions, and I'll intersperse some commentary on some other stocks I'm thinking. Or I'm looking at, rather. I'm thinking of looking at or buying or whatever. Anyways, is Yelp setting up again? Well, you know, stock's building a base after a sharp run, so I can't tell you looking out into the future if that's exactly what's happening. But I can tell you that, you know, it's trying to build a base right now. It undercut. Notice again, you undercut and violated the 50-day moving average, but you found support at the 65-day exponential, and you turn higher. Same thing with Facebook. Violates the 50-day moving average, but it bounces off the 65-day exponential. So, you know, I find the 150-day exponential here and the 65-day exponential are interesting moving averages. I also use a 20-day exponential. Some of you know that on here. I think it's a 20-day exponential. Let me check this. Moving average 2200, 20. Where are you? Here you are. Yeah, that's an exponential too. So I use that on my daily charts. You see Facebook bouncing off the 65-day. It may be just setting up in a base, so it might be just fine, and stock's going to head higher from here and turn around and come out again, you know, going into year end. What is a Wyckofian low? Well, I'm going to go back to this Tesla example, and you can even say, you know, LinkedIn I think is a little bit of that, because you go back. Well, let's look at Tesla. you're coming in here, you form a bottom, you bounce, and you come back to retest it, and the volume is lighter on the retest. And if you successfully hold the low, so I expect it to hold this low at, I guess, 132 and change, if it's going to come off of here. And I would imagine just the weight of the market or the lift of the market is going to take it higher. So, anyways. I've got my backyard swarming with gardeners trimming trees and bushes and whatnot, and I hope nobody can hear that. But if you hear sort of a Texas Chainsaw Massacre thing going on in the background, it's just the gardeners. Anyways, that's a white coffee and low. Finisar, possible double bottom. I don't know. This is too soon to be a double bottom. You're 2 weeks down, so I don't know. The pattern to me is broken and needs more time to heal. Not playing it. Let's see. What did we miss on the EPS, which looked ugly? This is a hype story. ONVO. What did you miss? I don't know. I think the thing is you try to think about it too much and you forget that there are exceptions to CanSlim rules, particularly with biotechs. Dr. K, you want to expound on that and how Organovo fits into that precedent?
Yeah, in the late 90s, we had a huge run-up in the biotechs, and this coincided with my observation that that certain companies, key companies, don't have to have earnings, and they could still go up hundreds of percents. And so this certainly applied to the biotechs at the end of '99 when Celera Genomics announced that they'd mapped a good part of the human genome. And that set in motion a lot of these biotechs, together with Celera, to make extraordinary upside moves between the fourth quarter of '99 and the first quarter of 2000. So if you used old school rules about not buying stocks with earnings, you missed out on massive, massive gains. And it was the reason that I was up triple digits in both. Well, I was up triple digits in '99 anyway, but it launched my 2000 was a great year because of that, the first quarter. And just keep in mind that the story has to be compelling. Organovo, of course, has a very compelling story. It is the only publicly traded company that does three-dimensional bioprinting. There are other companies that are not publicly traded that are competitors of Organovo, but in Organovo, it's an Amex-traded stock. It's just shy of $1 billion market cap. But the story is so compelling, and the price action on this leading up to the buy point that we mentioned when it was trading right around $6 was certainly not a CanSlim type stock, but it was certainly a great stock to be involved with because of the name, because of what they're involved with. So you have to throw away the idea of the stock has to have earnings, and even in this case sales, and you just look at the perception of the stock. There are a lot of dot-coms in '98, '99 that had no earnings or very little sales and no earnings, and the perception was huge. So a lot of these names actually could be played, and some very profitable trades could be made in a short amount of time. So anyway, this one fits under that category.
Yeah, definitely. Somebody says UUP looks like a pocket pivot. I guess right here is what you're talking about on November 4th. I guess you could call it a pocket pivot. It's a little bit stalling, but I think Dr. K expounded enough on the.
I wouldn't use pocket pivots for. Generally, pocket pivots are for stocks and for. Well, you can use them for cleanly traded ETFs, and these tend to be ETFs that are focused in one area, like gold and silver. Work beautifully for pocket pivots. With UUP, you can see that even though it's focused on the dollar, it's a very sloppy chart, so the pocket pivot really doesn't carry much weight.
Right. Someone's at Icon Enterprises is an MLP, and it keeps moving up strongly. It seems to obey 10-day moving average. Is it too high risk to buy now? I don't even know what the symbol is on this one. So, but I think that's kind of kind of a silly question. Is it too high risk to buy now? If you have a buy point you can act on, then I guess it's it's in position to be bought. But otherwise, just asking us, is it too high risk to buy now? How do we know? Maybe it continues higher. It just depends on if it does go wrong. What are you going to do about it? What's your stop? Anyways. Let's see. In your first book, you talk about a stock, pocket pivot, or Bible gap of being too far extended from the 10-day or 20-day moving average for it to be actionable. to what degree do you look at the percentage extended against these moving averages, Dr. K?
One more time.
Well, you talk about not buying pocket pivots that are extended. We don't talk about viable gap ups being extended from the 10-day or 50-day because they're usually pretty extended from those moving averages. So only pocket pivots. So
you have to have a good price volume setup really leading up to either one. Good. It has to be constructive, and we talk about that.
So what do you call what is too extended from the 10-day moving average?
It has to be contextual to the chart. So a very conservative traded stock that has low volatility, 5% could be too much. Whereas a more volatile stock, 8% might be fine. So you have to develop your chart eye by being able to see, what is extended and what isn't. So it's always contextual.
Right. So there isn't any one-size-fits-all answer. 5, action has been good last few weeks, but lacks substantial volume. Okay. How important is large volume as positions move higher based on your experience? I don't know. It depends. If the stock goes higher on light volume, that doesn't really mean anything in and of itself. Some stocks will just continue to move higher on that basis. So.
Yeah, I wouldn't get too bogged down in that sort of detail because it's very hard to predict. I mean, it could make you end up selling prematurely just because the stock keeps hitting new highs on light volume. That happens an awful lot too, and it doesn't mean there's anything wrong with the stock. We have the classic situations like wedging patterns. If the stock is going out sloppy on lower volume, that's obviously a defect in the pattern, and you should probably keep your stops fairly tight. And just use your chart learning. Price volume action, what constitutes strong versus weak price volume action, on a day-to-day basis, and look at the aggregate of days, and that gives you a general. Look at the basing pattern, and all of these factors go into the strength of the technicals that you're analyzing. And again, it's developing your chart eye. It's very key.
Yeah, the other thing here is that here's a breakout in this stock, and there's no volume in it. So, it went higher. So it doesn't really mean too much. But it was I don't know, was that a pocket pivot breakout? Let's see.
Yeah, it looks like it barely had one.
861 versus this here.
Yeah, that was a pocket pivot.
Was it?
It was an extended breakout pocket pivot the next day.
Okay. Yeah.
So it was a breakout. I wouldn't be buying it up there.
Yeah, and it went higher, but you don't see huge volume, so I think the thing is fine. Just don't overthink it. KKD looks good. Yeah, it's acting fine. Stock interestingly made a comeback. Here's this breakdown, and then you go tight sideways, and then it moves higher. I guess this is the square box type position. Generally, what you'll see here, though, you see a bottom fishing pocket pivot coming up to the 50-day moving average. That's your buy signal. You don't have to wait for it to set up, in a base and then break out. You can just buy it on the pocket pivot basis. So now it's hanging along the 10-day. Looks fine. Let's see. Somebody also asked this question: must a no earnings biotech have sales? ONVO has no real sales.
Yeah, it doesn't have to. Really, what's key is the story behind it and the price volume action that gives you the clues on whether the stock's actionable or not.
Right.
And ONVO had some clean technical action with some very sharp upsides, and then the fact that it's only it's the only publicly traded company in its space. It's got first mover advantage. The fundamentals very much measure up for a very compelling situation.
Right. Here's this Icon Enterprises. So someone asks, is it too risky to buy here? Well, there's no buy point, so there's no reason to be buying it here. So if you're asking us the question, is it too risky to buy here? Well, you don't even have a buy point. So, and I think that's a silly question. Sorry, but it is, because if we say, oh no, you can buy it here, you're going to buy it on the basis of our babbling about it. I mean, it's kind of silly. We have rules for these things, and the main rule would be a pocket pivot off the 10-day, which you're going to have to see it exceed this volume here, at least. And this one here, I don't know. Yeah, I mean, you'd have to exceed that first, and then you got this one below. But it could be seen sort of as a supporting day, kind of. But it's still down on the day, pretty good on heavy volume. So that's what you're looking for. Buying it up here, being risky or not, is kind of irrelevant to the real question, which is whether you have a buy point in it. Blocks, they announce earnings, I think, next week. And it's just kind of trying to round out a low in the base, holding the 50-day, but you'll see what happens after earnings, I'm guessing. That's really what's going to be the real test for the stock. GB, what is this, Great Bach or something? I'm trying to remember. I don't know. I guess stock bounced off the 65-day and the 50 here, and then it's turned back higher. So pulled back into the breakout zone here and has turned higher. So it's just sitting there. It's an incredibly thin stock, though. It trades, what does it trade, like 5 shares a day or something? No. 646,000 shares a day. It's pretty thin. So little tiny stock, I believe. Did I have that right? Let me see. No, I'm sorry, 98,000 shares a day. What am I looking at? So that's like nothing. So I don't know. To me, it's kind of doggy, but it's working so far. P. Well, you had I guess you had a pocket pivot here a couple days ago, and you're breaking out and running higher. So that's about it. You have no other revelations to tell you about the stock. Away is running away here, if you can see. So it's up and away. You had a viable gap up here. It came in. Might have stopped you out. The one thing I noticed about away is it has huge short interest. And I wonder if that means you're going to see a short squeeze, and it looks like that's what's going on. So, but at this point, it's out of there. So not in a viable position. Do you sell it here? I don't know. VoxelJet is another 3D printer, and it's running away here, so it's just going higher. So I think you might have had, no, you didn't even have a pocket pivot breakout anywhere in here. So it's just kind of going away. You're looking for a new base to form probably in here somewhere. So anyways, let's see. Any other questions? DAAT, uh-oh. Whoops. Yeah, stock trades 14,000 shares a day. I don't know why you'd bother with this one. Some little cheap penny stock. It's garbage. So, is that for real or is that a misprint? Oh, JATA. Okay, thank you.
I was gonna say.
Yeah, I was wondering. It's like, oh my God.
What are we doing wrong, Gil?
I know. Oh God. Anyways, let's see. Data is just, I don't know. It's trying to run, trying to form a base, but I don't really see anything yet. No pocket pivots or anything. So, Groupon.
Yeah, it's
I like
kind of a sloppy pattern
Groupon.
to this data, so it needs to tighten up in this pattern. Otherwise, you're liable to get whipsawed.
Right. I think Groupon's probably going to have to pull back in here off the 50-day. I tried to get above it today. You had a pocket pivot here, so it's trying to round out a new base. This is what it looks like here. And, it's had a big, a big move off the lows. It's still well below where it went public, but you'll notice trying to round out off the lows, you get some big volume. Last week on a supporting week, even though it was down, and that was the pocket pivot, and now it may back in a little bit. So I'd prefer, if I'm going to buy it, I want to buy it closer to the 10-day moving average. I think it's a sell at the 50-day, waiting for it to push some kind of pocket pivot buy point or something. So that's what I'd be looking for from here, and it may need to go sideways. But I think they made all of 2 cents in the most recent quarter, and Yelp lost 4 cents. And what is Yelp doing today? It's up at 69.26. So that's not doing too badly. So why can't Groupon go, back up to the highs? That's what I figure. Netflix is, I'm thinking a little bit slowing down here. You didn't get a pocket pivot. I would have preferred to have seen a pocket pivot. It may back and fill in here. That's my thinking on the stock now. So yeah, I mean, I don't, it's still a little bit questionable. So I had some of this, I sold it. What do you make out of REGN? Another pocket pivot. Well, yeah, that was a pocket pivot, but it's not, it fails pretty quickly. It looks to me like it's at least building a base, more of a base in here. So it needs to set up. Yandex. I thought Yandex looked viable yesterday morning, and long here you have a violation of the 50-day, and it holds a 65-day exponential and turns higher. So that's looking pretty good there. I'm looking at some of these oils. Oil industry's been doing good. Carrizo is pulling back. It's just hovering below the 10-day. This BCEI also looks interesting. Bonanza Creek just hanging along the 10-day moving average. Volume is drying up. A little base here. Coming down, you get big support off the 10-week line last week. So that's the first pullback into the line, it looks like, since this breakout. And so it looks like it might be a buy point. We'll see how that pans out. Let's see, what else we got here? Is oil viable based on the 1113 pocket pivot point? USO, what pocket pivot point? This? Is that a pocket pivot? I don't know. This is not, the only thing we really deal with is silver and gold. We can understand those, but oil, I don't know. I don't know what the dynamics are for the thing. Maybe you could buy the pullback if you know how to play commodities. Do you have anything to say about this, Dr. K?
Yeah, these patterns tend to be pretty erratic. And I mean, yeah, I'm not at all interested in this space, and probably won't be for a while until it sets up. It's probably going to take a while before it does set up, because it doesn't set up very often.
Right. NXPI. Here's a daily chart. And stock held the 20-day, and it's just building a base. You had a viable gap up, so it's just moving sideways. There's nothing really too telling one way or the other. It is moving sideways. You're seeing volume dry up, which is constructive, and that looks decent, I think. Some other stocks we can look at here. YY. Let me link up here. A line yesterday had a gap down. I guess Danaher was selling a bunch of the stock, and so they were dumping it at 45 something, I guess, or 54 something. Yeah, that's it. I'm being dyslexic again. And they unloaded several million shares, so they took it down there, crossed the block. Is it okay here? I think if you own this thing on the basis of the viable gap up, the low at 53.15 is your ultimate stop. I mean, it was hanging in there very nicely, had a couple of pocket pivots. Well, I think just one here, actually. And it's tried to break up, but notice how it didn't. Somebody knew something. Somebody knew these guys were coming out with there's going to be a sell somewhere. That's what I think. And so this came out, and they said they might sell more later, or they might not, or they might buy some. A bunch of baloney that doesn't tell you anything. But anyways, in this case, I think that's how you would handle this one. Taser, would you buy on pullbacks? Well, Taser had a viable gap up. It held the 20-day exponential moving average, which is constructive. Okay, and then comes up off of there on a pickup in volume. You actually get a little trend line breakout if you connect these tops here. You come out of the top, and it's holding the 10-day line. So I'd be watching for some kind of pocket pivot off the 10-day line. Maybe buy it on pullbacks to the 10-day line in the low 17s. Like I think it went down to 17. 2024 or something this morning. What was the low in there? 17.20 actually. So it comes right in there. It's probably viable in there as long as it can hold. I would even say hold the 20-day moving average. It looks fine. GNRC. Generac. You had a Bible gap up, forming a flag here. No buy points, just hanging in there. So is it going to be 3 weeks tight in here? Yeah, it's forming a little flag, a little base in here, so it looks okay. Going to pull up Twitter. Take a look at that. A lot of people ask us, should I buy Twitter? This is kind of what it looks like. I would say you should want to let it base out a little more and see if a 10-day moving average, when that shows up, maybe it becomes viable off the 10-day moving average. So you might check that. So that's what I'd be looking for. Dr. K, you have anything to comment on Twitter?
Yeah, well, let's wait for the pattern to trace out, and hopefully, we'll get a valid pocket pivot. Sometimes these pocket pivots can occur within a matter of just a few weeks from the IPO date. Right now, Twitter's pretty sloppy, so that's a word of caution. I'd like to see it get a little tighter in the pattern, and then issue some sort of buy point. As far as the fundamentals go on Twitter, it's got a market cap of 24 billion. And it could do something. It could do anything from here, really. It's of course conditioned on the strength of the market. If the market continues higher with QE, then it could certainly maybe do what Facebook did. Facebook is the dominant leader in its space, and Twitter in a different sort of space that's very close cousin in this viral networking business. So, and then the group rank is 4th, so it's got the group. Tailwinds on its side, so let's see what happens with this one.
Yeah, I mean, we'll see. I think it's just a matter of just watching it and see what happens. Let's see. Any other questions? SFM, Sprouts Farmers Market at the 65-day exponential. I don't know. Why do you need to ask me? If I pointed out the fact that a lot of stocks will violate the 50-day moving average and may find support at the 65-day, then wouldn't that imply that you could probably try and buy a little bit here and see if it holds up? If it just keeps plummeting, maybe it undercuts these lows and then comes out of there. But, am I going to tell you, yes, it's at the 65 days? It's actually a little bit below it, to tell you the truth. And yes, you should mortgage the house and sell your kids and your dog and whatever valuables or invaluables you have and put it all into SFM right here because it's at the 65-day, or rather slightly below it. ACAD. I think ACAD is interesting because it had this big breakdown. And remember, we were showing another pattern. I forget which one that was. That had a little. Let's see if I can find it. For you, Dr. K. It's your mother.
I'm going to pick this one up. I'll be right back. Hello?
Okay. Let's see, I'm looking, on this one, GB. You see how, is that right? No, that's not it either. Let me see. Let me run through everything we've talked about. Nope. Well, in any case, it's in position to form this square. Okay, to form this square box type of formation where you've been kind of tight. It may need some more time to get tight, but notice how it's hanging along the 10-day and the 20-day. Volume is drying up. It looks to me like it might want to get moving to the upside. So on that basis, you could nibble at a little bit here and see where it goes. See if it works and turns out of here, or just wait for a bigger pocket pivot coming off of the 10-day, 20-day confluence. You can see a whole bunch of moving averages in here. But it has found some resistance at the 50 days, so it may need to set up once again and try to go higher. So, so maybe rounding out. But remember, it's a biotech with no earnings, so might be problematic there. Let's see. Trip, Vanda. I don't know. what's to say here? You had a gap up move here, straight up off the bottom, not necessarily a viable gap up, and that's what it looks like. You know, it's all news oriented. So why am I gonna? You know, I'm not gonna step in and buy it here. TripAdvisor, you actually had a breakout through here. Yeah, it's not. I don't know, not much volume. I think it's, you know, like Priceline. We've been talking about Priceline. The pocket pivots in Priceline here, for example. So that was viable there. It'd probably be the name to be in on the basis of constructive action. So Trip is just kind of following along with the group, which I think is cruising along like that, and Away also might be considered part of the group, and it's doing pretty well. So, you know, nothing really wrong there per se. So let's see, what else? Any other questions? Trulia. Trulia was a great short. You know, it formed a head and shoulders. We talked about this last week, and it broke down to the 200-day, but that becomes a spot where you want to cover it, and now it looks like it's trying to head higher, and I don't know if it becomes a short up in here or not. It could just be setting up in a big, you know, big pullback that's going to take it higher, and it rounds out a new base. So at this point, my feeling is it's done as a short sale target, and you have to wait for it to set up. It's also, you know, if you're in a bull market or you know, new breakout in the indexes and you're going higher, shorting is not going to be your number one, your most profitable activity. Okay, so I think that's what people have to take into account. But I think for now it's just done. Silica, they did another secondary. I think they priced it somewhere around, what is it, 31 or something. And the stock is trying to you know, find some support at the 20-day exponential. Volume is pretty light this morning, so, you know, just kind of hanging out, trying to build a new base. Let's see. I don't really think there's much there. You know, you have a big volume break here, got support off the lows and rallied. So, you know, I don't know. Let's see. VNet. What's VNet? Vianet Group. Let's see. Pretty thin stock, but you don't have, I don't know if you want to call this a down day. It kind of held the 10-day line. You know, is this a pocket pivot breakout? It looks okay. Because I don't see anything here. You maybe have a pocket pivot buy point today, but I think they're losing money. They're going to, well, negative earnings growth, 8 cents next quarter. So looking a little shaky there.
Yeah, a bit on the thin side.
Yeah. I don't know. Martyr just tweeted. Okay, well that's good. Kevin saw it. You know, whatever. Let's see. Anything else? Nope. I think that's all we got. It's 9:51. We've been going for 51 minutes now, or about 50 minutes, I'm going to say. Make sure I got all the questions. Here comes some more. Baby. Natus Medical. I mean, we talked about this last week. Thin stock and had a viable gap ups, continue higher. I don't think that. I don't know. Is that a pocket pivot there, Dr. K? 448. And you got 460. Yeah. No, it wasn't enough volume for a pocket pivot. So
that's interesting. And it's really, it's quite a small cap.
Yeah, it's not bad, but they're, you know, negative earnings growth, minus 50%, minus 42, and what is this? Oh, I'm sorry, that's VNet. Let's see.
The earnings are okay.
Up 80. Yeah, I mean they're okay. Sales up 5%. It's nothing spectacular, but you know, not the end of the world. So looks okay. Kiwi. You want to talk about this one, Dr. K? You put out the pocket pivot on it yesterday, which would have been here.
Right. Yeah, you know, it's nothing much to say. I mean, it's still potentially within you know, your buying point. If it doesn't exceed your risk tolerance levels, the earnings have been very strong. Sales have been accelerating. A lot of institutions jumped on. Group ranks 22. You know, it's an IPO name, and it's you know, a pretty good space. So nothing much to say really on this one.
No, except it's kind of thin though. It trades I believe 149,000 shares and or 361,000. So it's a little bit on the thin side. So you want to be careful with something like that. But other than that, it looks okay and hanging in there. I guess you could buy the pocket pivot on it yesterday. Just be advised that it is somewhat thin. And their earnings are due on Tuesday, it looks like. So, anyways, what else we got? Apple. If you haven't already, no, we haven't. You had a pocket pivot, but yesterday here's the pocket pivot off the 10-day. So pulling in a little bit. It's kind of like a little of this, a little of that, a whole lot of nothing. So it's not really going anywhere, but it's acting okay. So can't really fault it. On that basis, but you remember it's a has-been stock. It's building a huge bottom here in this pattern, so could it head back up? Maybe it could. Remember Green Mountain did that and came all the way back up to new highs, and Netflix did that as well, coming after it broke down. So it could go higher. So if you like it, and you're in love with Apple and Apple products and everything Apple, then you could probably buy some here and see if it works. At the very least, I'd expect it to hold the recent lows along, say, the 200-day moving average, or the 20-day moving average, rather. So that looks okay. XOM is ExxonMobil. That's just a gap up there. If you wanted to buy it, I suppose you could. Don't have really too much to say about it other than that. Let's see. Cena. You had a big gap up there. Is that a viable gap up, Dr. K, in your view, on Cena?
Let's see here. Yeah, I mean, it's came after on good earnings. The space is strong. Group ranked fourth. It's a sloppy pattern leading up to the viable gap up, but it is a viable gap up, so that you can forgive that sloppiness to some extent. And the earnings and projections are looking pretty good. So yeah, this is it's not the strongest one, but it looks okay.
Yeah, it's acting okay, but it's a lot of these are trying to rally up off the lows, and that looks pretty ugly. Sohu, let's see, that's pretty grim, but so the group here isn't really that strong. I was looking at EJ yesterday on this huge move up. I don't know what's going on there, but they're coming out of a little flag. And that was kind of looking good. Also notice WebMD, trades 973,000. That one's trying to break out of a base here. Just things I've noticed. Anyways, let's see. HLF, someone's asking about that. I don't know, just coming up out of here. Is volume heavy? What do you think of this one, Dr. K? I mean, this one's been really controversial. There's been a lot of stuff and arguments between Icon and the other guy, whatever his name is, has been shorting it, and the stock's trying to come out of a double bottom. So, what's the short interest on this thing? 7.4 days. So that's about, what, almost like 18 million shares, something like that.
Yeah, I don't know. It doesn't really get me going enough. But you could take a small position if it breaks through the midpoint at 70.67.
Right. That's a possibility. Yeah, I don't know. It doesn't really thrill me.
It's not a bad stock, but we're looking for the best names out there.
Right. So, and it's also
it's kind of like the Cena thing. I mean, Cena's more. I like Cena more than I like this one. I'm just debating. Is it actionable? Yeah, it couldn't hurt to put a report on Cena, but this one I wouldn't. Not that interested.
Yeah, I don't know if I'm even interested in Cena. So let's see. How about NQ? What's going on there?
It's not the best. It's not the best merchandise. That's the problem.
Okay, Dr. K. Some executives of NQ are buying the stock here. And I noticed this low, it's pulling back, you're drying up on volume, and I don't know, maybe shorts are soaring on this, maybe they're not. But I noticed that you've got this pullback in here. What's your take on this thing? Would you touch this thing with any length of pull?
No, not at all. I don't care what
Yeah.
the executives do. It's irrelevant. Look at the chart patterns first. A lot of these guys, they're smart, but they have no clue when it comes to the context of what they're doing, and they might have overlooked many different things that have, first of all, caused this big drop in the stock, and therefore probably overlooking other aspects in terms of where the stock's going to go in the future. Right now, it looks horrible. So don't care about the fundamentals when it comes to selling and when it comes to these sorts of patterns.
Yeah, I guess I'm with you on that. So, but if you're really into being risky, you could, and you think it's all baloney, which I can't really determine whether it's on. Management says one thing, these muddy waters guys say something entirely different, and all I know is the price volume action is not all that pretty. But if it was turned out to be phony, this might be a spot where it's drying up and pulling back. That's sort of something I'll look for. So, anyways, I think that's all we have. CTSH. Cognizant is just going higher, so I don't know what to tell you there. It's going almost straight up. So I don't know if you have to take a profit here or what. If that's what you're asking us, and I don't know what's your decide what your selling guide is for the stock, and then go operate on that basis. Anyways, QLYS provides cloud security. Oh, you read IBD last night too, Qualys. Yeah, it's just you're getting a move today on the news out of IBD. The stock doesn't hit my radar screen mainly because it's low volume. So, trades like, I don't know, 100 and something, 100 maybe, 161,000. So it's way too small for me. And so I'm not really that into it myself. It's not, I don't know, is that a flat base? It looks kind of choppy and erratic. It probably needs more time at best, but it's still just a really thin stock. ONVO falling, somebody says. Well, it's reversing after, you don't know what it's going to do. Is it going to reverse the whole thing and blow apart? And you don't know. You have no idea. Or is it going to come in, hold in tight, and then form a tidal base? I'd be looking for something like, remember Taser? When it ran up and it finally had a reversal and then it settled down and set up in a tight flag. With ONVO, that's what I'd be looking for in terms of wanting to buy the stock. As I already said, I would have already been out of the stock probably before today and selling and taking a profit and then looking for it to set up again. So, do whatever you want to do, but I can't, based on what you're looking for out of the trade or what you think's going on.
Well, if you're holding the stock, you should have sold it when it, first of all, the volume is massive on this thing, and it's had a huge run up. And if you look at the prior run ups, when it topped, it's expressing a topping pattern. So, get out of the stock. If it's going to keep going higher, it probably needs to correct in base for a while, like it's done before. This is a very signature topping, short-term or intermediate-term topping pattern. So if you own it, I would be taking your profits here. As far as buying it initially, don't touch it now. Wait for it to set up again.
Right. So so Dr. K said what he would do. As I said, I would have already sold into the move, and then look to buy on the pullback. So of course that if you all do this today, by the close, the stock's going to turn around and go back up to new highs. Okay, I just want to give you the caveat. That's usually what will happen, anyways. Somebody says I sold it on the 620 cross today, and let's take a look at that. Let me see if I can pull up a new chart, and I'm going to bring that over here. This will be the last thing we talk about. I'm trying to pull it up here. Let's see here. Give me a sec. We can look at this one. Where are you? Stay with me. Stay with me. Okay, here's your 620 chart, and you can see the breakdown, I guess, early in the day when it rolled over through the 620. But I guess you could have seen that yesterday towards the close, it's hanging in there pretty well. But you did have a sell here on it, and it hung in there. So it's not really like it's a sure thing to do. But on a climactic day like today, you could have used this as a way to lock in some profits off the peak. So, and it looks like it might have worked. So, anyways, let's see here. Save, last stock. And we're out of here. Save is just holding up on the flag. So, you had the Bible gap up. We didn't like it. And remember at the time I told you, just because we don't like it doesn't mean you can't act on it. You can still come in and take a position and see where it goes based on the technicals alone and using the rules of the Bible gap up. So, and that's all I have to say there. Nothing else going on. It's holding the 10-day. RH had a pocket pivot back here, and it's moving higher on lighter volume. So I think earnings come out next week. So I kind of watch and see how that develops. And that's basically all I had to say about that. Anyways, I think that's all we got time for, Dr. K. Thanks for showing up, everybody. You're in a upside rally, so you're looking at things to buy. Gave you some ideas to think about, and we'll just see where you go from here. Not a huge amount of things that are actionable here. But there are some kind of tricky plays, like I was talking about the Tesla, for example. I think that's probably close to a low, and I would expect for it to rally soon. It may not do it today. May just continue to pull back in here. But my thinking is it's probably getting to a point now where you're drawing up on the downside. So that's my thinking. I could be wrong, but I have a stop at 132.38 is where they're going to push me out, which is what 3% away. Woohoo! That's a tough one. Anyways, that's all. That's my thing on that. That's all we got. So thanks for showing up, everybody. We'll catch you next time. Take care.
So long, everyone.
The organizer